What's up, guys? It's Dan from Coin Bureau Trading. Today's video is a second video in a four-part series about how to trade crypto for beginners. Today's is super simple. We're just going to be looking at support and resistance. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. So guys, we have a very nice kind of chart here, example from Optimus Futures about how support and resistance work. You can imagine support and resistance as kind of being like these imaginary lines where prices struggle to get above. Like if prices are rallying, it's a level that they struggle to get above, and if prices are falling, it's a level where typically people will buy and where prices will bounce. So again, resistance when prices are rallying, it's where prices struggle to get above consistently. Support is when prices are crashing and consistently prices don't go lower than that. A lot of people step in and they kind of buy the dip. And of course, when we see prices get above that resistance level, then that resistance then becomes support, and then you basically look up, you look higher to the next level and say, okay, where is the next key level? And the thing is that in crypto, prices can be quite volatile, which is why I personally stick to just doing like starting point and resistance and target rather than looking at like support resistance, because they can just like flip flop constantly. And a lot of people actually prefer just to use the term key level, instead of support and resistance, just be like, what are the key levels? Which key level is it headed to next? Because again, you can see things switch quite quickly, especially in crypto. But it's really interesting, guys, because when you see the main thing to keep in mind is when you see prices get above a resistance, initially, it's very common for them to basically retest that key level. So they'll get above the resistance, then they retest it to confirm that, yes, it is now the new support, and then they keep heading higher. It's that second move, it's that confirmation higher, typically when you want to be basically going long or betting that prices will go up, is after it's broken up. It's not after it's broken above the level, but after it's broken above, had a little bit of a pullback, and then it continues higher, because then it's like, yes, we're confirming we've got to this next support level, we're ready to chop in the new range, basically. And of course, during crypto bull markets, when things are really going parabolic, you can see prices going again like a lot higher, a lot quicker, and just like blasting through these support and resistance levels. But anyways, guys, to use an example here, we have Bitcoin on the daily. Super simple, super straightforward. And this is where identifying these key levels becomes very important and also kind of interesting. So of course, you might be curious, it's like, well, why did I draw a key level around 80K? The main reason, besides the fact that there's a little bit of previous price action there, key levels, especially when it comes to support, tends to be around like key psychological levels, right? So a lot of people, they think 80K, or if a price breaks below 80K, like basically 80K, 85K, 90K, 95K, 100K, 105K. A lot of these like round numbers tend to be key levels that people watch just like intuitively. Like I could literally draw like 2 or 3 times more lines. We could have like 15 lines on here identifying every single key level. And, you could say there's another one around 100K, obviously, right? Because that's a key level. You could say that there's another one around 103K and so on, right? So again, like some people might say, oh, like you're drawing the lines wrong or whatever. The kind of honest truth is that there's no such thing as drawing the lines wrong. And I would say that the key thing is that so long as you can tell very clearly, again, for some of these key levels, they're going to be very obvious. Like this 92K, very obviously a key level. Not the case for some other levels, even like something around, I don't know, 96K. It's not as obvious, but you could kind of see it in there. But point being is that, there's no kind of perfect line drawing. Everyone has their own strategy. What people see in the charts, again, is different. This is something I mentioned at the beginning of every video. It's like, if your opinion is different, a lot of that has to do with basically this analysis. And some people might say, well, it's not actually 92K, it's 93K or whatever, right? But again, the specifics don't matter so long as you have a sense. Like, that's the key thing. As long as you have a sense of roughly where that level is, that's all you need to know. And I would say that's very appropriate, especially because of all these liquidations that can cause temporary deviations above and below these levels. And this is something that I've repeated a lot in other videos, is that because of the liquidations, whether it's short squeezes or long liquidations, it's very common that, again, like you'll see temporary deviation above, temporary deviation below, right? And this is what really messes up traders. And this is precisely why I personally don't do trading in the shorter term. I focus more on these like longer term structures. And I'll show you what I mean by that by using a chart here of osmosis, which is also on the daily, but I've zoomed out a little bit here. And, when I'm analyzing a crypto, especially an altcoin, this is the type of stuff that I like to do is I just really like to zoom out and say, okay, of this whole like recent price action, where is the lower range of that price action? Where's the upper range? Where is the kind of like the lowest level of support and where's the highest level of resistance? And then any chop within that range to me is completely normal. Same thing here you could say with Bitcoin. Any chop within this range here between that we saw between, let's say, 92, 93, again, you could up for debate, but any chop between, let's say, this 90K and low 105K whatever region, any chop there is completely normal. Any chop between 80 and 92K is arguably normal, right? It's when you see like continuous just like collapsing, 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 that's when it gets scary. And of course, when you see continuous like breaking above, that's when things get exciting, right? Scary when it's doing it on the way down, bullish when it's doing it on the way up. If it's just like gradually chopping within this range, it's not really just like bearish price action. It's just, as we mentioned in the previous video, this is more of just like, okay, maybe there's some accumulation going on in the zone and eventually it's going to get back into this one, which is a nice segue. Again, of course, if you hold lots of altcoins, then chances are the altcoins you hold, the chart probably looks something more like this. But the fact is that if you were to look and draw like trend lines and say, okay, where's the lowest level of support and where's the highest level of resistance, you would probably end up with a chart that looks similar to this. And you'd realize, wait a minute, going back to this chart that we showed of Wyckoff from yesterday, you'll see, wait a minute, this means probably like we can apply this kind of like a accumulation distribution, this Wyckoфfian kind of school of thought. We can apply that very clearly, especially I would say to altcoins, because that's where you tend to see, I would say, a lot more manipulation versus something like Bitcoin. And of course, the whole idea behind Wyckoff is the assumption that the market is manipulated. So if we look here at osmosis, you can say, okay, well, very clearly what's going on down here, that must be an accumulation zone. What happened up here was clearly a distribution, whales taking profits. Here, whales have been accumulating, and eventually they're going to come back up to that range, maybe do a distribution again, or continue moving higher. And again, the reason why we see temporary deviations above this level or temporary deviations below this level is because of those liquidations, right? Because of long liquidations, because of short squeezes, is what causes price action to go out of these ranges temporarily. And this is the thing that can really mess up traders, and why I personally prefer to just like buy and hold, and I'm not really actively trading, because you will, get wrecked unless there's someone who really knows what they're doing. Someone like Aaron here on the channel who's an actual expert in trading. But if you're someone who's new to crypto, someone who's not as experienced in trading, which, even though I've been, let's say, like trading crypto, let's say for the last, I don't know how many years, it's still not on the same level as someone like Aaron, right? And unless you're someone who's a super expert, and if you're watching this video, you're probably not, then you shouldn't be, like using these levels necessarily to trade. You should just be using them as a reference point to understand where are we roughly in, again, in this accumulation distribution, in the short term kind of thing. Where are we in the longer term? Of course, in the case of something like Osmo, the uptrend isn't as clear. But for a lot of altcoins, you'll see, yeah, they're still in an uptrend, just like Bitcoin in the long term, right? And especially so long as Bitcoin is in an uptrend, then in my opinion, there's no reason to be concerned about these altcoins, because again, altcoins tend to see the biggest gains as Bitcoin enters that final stage of the cycle, which is approaching, which will probably occur sometime over the summer or in the fall. And that's when altcoins see their biggest gains. And until then, altcoins are just chopping in a range, and you just say, okay, well, it looks like they're in an accumulation zone. It looks like whales are probably accumulating around this level. Not financial advice, but for someone who's accumulating, might be a good idea, right? And then if you see whales are distributing and you see a lot of FOMO, then maybe it's a time for you to take some profits off the table as well, right? Like this is the way that you use these levels. It's not something necessarily to like go all in or all out, even though that is my personal strategy, but maybe that's something we'll discuss in a future video. Anyways, guys, that's all for today's video. It's super simple, super straightforward. I guess to quickly recap, support and resistance. Resistance is where prices struggle to get above when they're rallying. Support is where prices will basically hold when they're falling. A lot of people will come in and kind of like buy the dip. That's the support. When people are really selling around a certain level, that's resistance. Once prices get above a support level, you will see basically a retrace to that key level. When you see a break above the resistance, then you see a retrace to that level to confirm that it's support, and then it keeps heading higher to retest the next resistance level, chops in a range, continues heading higher. That's exactly kind of what we're seeing with Bitcoin here. It was chopping in a range, fell to this lower range. It'll probably get back up into this range. Who knows? Maybe it'll already be between that 92, 105K range by the time you see this video. And then after that, it'll probably head even higher. Who knows where that next range will be? Maybe somewhere around 115K or 120K, right? And I would say that's really the trickiest thing when it comes to using support and resistance. It gets gets harder the higher that you go. And of course, as I was mentioning though earlier in the video, one kind of easy way to think about that is say, okay, like what is kind of like a key psychological level that a lot of people are probably watching? Probably like 110K, 115K, 120K, right? Those are kind of like logical levels where you would probably see some resistance. And of course, because a lot of people anticipate that, and this is probably one thing I should have mentioned earlier, when a lot of people can see the same level, again, ties into this manipulation with all the liquidations and everything. When a lot of people can see the same level, then it's typical for prices to temporarily deviate below or deviate above that level as a result of liquidations or whale manipulation. And that's why trading is so difficult, especially in the short term for crypto. Anyways, guys, I should mention before I forget that we do have a Binance deal, 20% trading fee discounts and up to $600 in bonuses. These deals don't cost you a thing. They're completely free. The exchange gets a new user, you get a trading fee discount, and we get a cut of the trading fees. It's a win-win-win for everyone. So if you're liking what you're seeing so far and you're thinking you want to try your hand, then be sure to take advantage of that deal and consider checking out the other deals in the description as well. Anyways, guys, that's all for today's video. And if you did enjoy it, be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.